Have you ever wondered what happens to your life insurance policy when your relationships change, or the financial need for that policy shifts significantly? An insurable interest, which is a financial or emotional stake in another person's continued life, is generally not required to be maintained after the life insurance policy has been initially issued and is in force. This means that once a policy is validly established, it remains valid even if the underlying relationship or financial dependency that created the initial insurable interest changes or disappears. The core reason for this principle lies in the legal definition of an insurance policy once it is purchased. At its inception, an insurable interest is crucial to prevent the policy from being considered a wagering contract, which would be illegal and unenforceable. It ensures that the policyholder would suffer a genuine loss if the insured person were to pass away, rather than merely profiting from it. However, once the policy is issued, it transforms into a property right belonging to the policy owner. This ownership right gives the policyholder the flexibility to manage the policy without needing to continuously reestablish the financial or relational connection. This means that, as the policy owner, you do not need to prove a new insurable interest if, for example, you divorce a spouse who is the insured, or a business partner leaves the company. You retain ownership of the policy and its benefits. You can typically change the beneficiary to someone else, surrender the policy for its cash value if it has one, or even sell it through a life settlement, all without needing to demonstrate an ongoing financial tie to the insured person. Understanding this flexibility is key, as it highlights the policy's status as a distinct asset. This property right allows a policy to be used for future financial planning, such as providing for adult children or leaving a legacy to a charity, even long after the initial reason for purchasing the policy might have evolved. It reinforces the idea that once secured, the policy itself holds value and utility beyond its original purpose. Ultimately, the principle that insurable interest is not continuously required after policy issuance provides significant stability and adaptability for policy owners. It ensures that your carefully planned coverage remains valid and responsive to your changing life circumstances, offering lasting peace of mind without the burden of constant reevaluation.